भारत की अर्थनीति में कुछ ऐसा हो रहा है जिससे डरने की जरूरत है।
Alright guys, if Indian market is bubble, then how to protect our portfolio? So in this video, I will show step by step how larger players are protecting their portfolio by taking collateral and using options. So in that case, I am using Reliance as an example. Let's say I have 10 lakh investment in Reliance. Now we are expecting that price will drop to certain level. Okay. So in that case, how I will protect my investment by using options. So what normal traders are doing, they are buying put option. This is the big mistake they are doing. So why this is a big mistake or high risk? So let me show you. So in that case, you can see I'm using a Reliance here. Right now, Reliance implied volatility rank and implied volatility percentile is too high. So if we buy put option, the premium is too high. So that is why we are not going to buy Reliance put option. So in that case, we will short Reliance call option. So let's say we are expecting that price will drop to certain level. So in that case, I will use call option far out of the money. All right, and it will be long dated option. It may be like next expiry. All right, so here you can see I'm using Reliance. So now you can see this is the Reliance and 40 days to expiry, and I'm using next expiry 29th August. So I'll use delta. So here you can see this is a call delta. So I'll use at least 25 to 30 delta. So here you can see I'm using 26 delta. In that case, that means my strike price will be 3,300. So here you can see this is the 3,300. So if I short 3,300 call option, my break even will be 3339. So you can say around figure 3340 here. So what is the meaning of that? So if price drop, I'll collect the premium. If price stays sideways, even I'll collect the premium. If price goes up to this level, I will collect the premium up to 3,340. All right, so I'll collect the premium. So if price goes above, so my loss will be in my call option, which I already sorted. So loss will be minimum. Why? Because my investment are here. My investment are almost you can say like not almost, it's a 100 delta. So if price goes 1 rupees, I'll collect 1 rupees. All right, so that is why my investment will give a profit. Okay, let me show you here one example here. Let's say I short here. If price goes and close in this area, so in that case my profit will be here. I can see my investment. So let me show you here. From here to this level, that is 223 rupees. Okay, let me show you 220 rupees, let's say, and my lot size 250, 55,000 plus in option. If I short 3 lot, so here you can see 3 lot. I short 3 lot, and I'll collect 30,000 and plus I can say 30,000. And total I'll collect 85,000. Okay, so now question is that if price drop from in this certain level, let's say we are expecting this is a demand zone, price drop because of some panic, or you can say like a bubble. So in that case you can see how many points are there from here to here, almost 200 point. All right, so same here you can see my lot size 220, let's say 222 to 0 into 250. Okay, 55,000, but I'll collect minus 30,000 premium. So net loss will be 25,000, right? So where is from where we got 30,000? Because we short call option. All right, so which is probability 80%, and by using collateral, so let's say I have like 10 lakhs, by using here you can see collateral, Reliance collateral are giving you can say haircut 17.5. So let's say in a round figure 80%. All right. So that means the broker will release 8 lakhs to me to write the option. Okay. Among the 8 lakhs, I will use hardly 3 lakhs or you can say like a 4 lakhs only. All right. So I'll keep free 4 lakhs to hedge my call option if it goes against me. If I collect like this 30,000, what I'll do? Let's say a Reliance price drop to certain level. Let's say in this area. So let's say I collect 30,000. I will buy again in a discount, right? It is discount, which is called free money. If I am not doing anything, my loss will be up to this level, right? 50,000 loss will be there. But by doing, or you can say by hedging, by taking collateral, I am collecting 30,000, all right, 30,000. So I will add another Reliance share somewhere that level. Okay, if price goes toward against me, so what I will do, I will short put option, which will be like 20 delta, 25 delta, whatever. Based on market condition, I will short put option rest of the 4 lakhs, because we release 8 lakhs and I short 4 lakhs call option, and the rest of the 4 lakhs are there. If price goes against me, so I will short put option, which will be like 20 to 25 delta to collect the premium. So in that case, my portfolio will be protected, right? The larger player and even we also doing the same method to protect our portfolio. So I hope you enjoyed this video. If you have any doubt, just leave a comment. Thanks for giving your valuable time.